What is going on, investors? This is why Peter Lynch for me is the GOAT, okay? Don't get me wrong. I love Warren Buffett. I love Benjamin Graham. I love John Templeton. I love all of their content, Howard Marks, so many other great investors that I've read. Their material is amazing. But for me, Peter Lynch is the GOAT, okay? There's nothing like his material out there. He's so down to earth. The guy is an incredible investor. And the amount of material information he's left for shareholders and made it so simple, so accessible, so easy to understand makes him the GOAT for me. Look at this quote. Whatever methods you use to pick stocks, your success will depend on your ability to ignore the worries of the world long enough to allow your stocks to succeed. No matter how intelligent you are, it isn't the head, but the stomach that will determine your faith. I plan to get this picture and this quote framed, and this is going straight in my office because this is so true. And on that note of ignoring the worries of the world long enough to allow your stocks to succeed, Alibaba will be reporting their earnings before market open on Tuesday. Now, unless you've been living under a rock, you would know that the previous week's biggest concern on Wall Street and amongst investors were what? Chinese stocks. And you had Alibaba got caught up in the middle of so much investor fear and the news surrounding Tencent, and also the news surrounding educational stocks that will be turned into non-profit. Alibaba suffered as a result. So I'm really looking forward to Alibaba and their earnings this week because I do have a position in Alibaba. But alongside Alibaba, there are also a few companies on this list that I have on my watch list as potential targets to start a position in. So this week's earnings is quite important for me. However, it's not my most important earnings week. That would be next week when you've got Tattooed Chef, Palantir, which are my two core holdings. They will be reporting their earnings. Alongside them, we also have Hims and a few others as well that I already own. They will report earnings next week. But I will be paying attention to a few companies on this list, and I'll be going through those with you in this video. So if you get any value, please make sure you smash the like button. If you're new to the channel, hit that subscribe button and the notification bell if you want to see more content from me. With that said, let's dive into the video. So Monday really isn't anything exciting for me personally. I don't really have any of these companies on my radar, but like I said in my intro, Alibaba will be reporting their earnings before market open, and I think we're going to crush it. I think Alibaba is going to crush earnings on Tuesday pre-market, and hopefully that should settle some investor nerves, because if we take a look at Alibaba on the charts, Alibaba got battered. There's just no easy way to put it, okay? From highs of $319 a share from back in November 2020, we're now trading at $195 a share, wiping billions off our market cap. Now, part of it, of course, has to do with Alibaba. Earlier on in the year, we had that $2 billion fine. But of course, the current events surrounding Tencent and educational stocks is not helping matters either. And as a result, we've crashed through a lot of the support levels from the Fibonacci retracement. And we are now almost approaching the 100% level. So for me, Alibaba is a decent size in my portfolio. It's less than 5% of my portfolio. However, I do think this additional selling pressure is just investor fear. People have just had enough of Chinese stocks, but this is the exact time when you need to be looking into Chinese stocks the most, because when there is fear in the market, that's when you're meant to be greedy. We all know the saying, Warren Buffett says, be greedy when others are fearful. So it might not necessarily be a good idea to absolutely turn your eye away from Chinese stocks, because I think China stocks right now are presenting some of the best opportunities on the market to date. Now, I haven't added to my position in Alibaba just yet. I am waiting to see if we can test $171, because that would represent a full 100% retracement from our previous highs. And depending on the results from earnings and pre-market, if Alibaba reports phenomenal earnings but the stock still sells off, and if we can test $171 a share, I'll be buying. I'll be buying. I'll double my position in Alibaba, because I just think, again, it's just a lot of fear and it suits my risk tolerance. Some people might not want to be involved in China stocks, period, and that's their own risk tolerance, and I completely respect that. But as for me, Alibaba suits my risk profile, and I have no problems adding at $171 a share. So next up is CORSAIR. They will also be reporting earnings pre-market on Tuesday, and CORSAIR has been on my watch list. Like I mentioned in my previous video, I own and sold CORSAIR at $40, but I was considering it as a swing trade at the time. But now I've done a lot more due diligence in the stock. I do think they have long-term potential, and I do think their valuations right now is starting to make sense, but I do want it cheaper. Now, one of my main concerns with Corsair was growth. I'd like to see a comparison of their growth this year versus last year, because my doubt is that their growth would slow, because last year, think about it, we had lockdown, people weren't going into offices, people weren't going to schools. The majority of people had a lot more free time than they would under normal circumstances. And there's no doubt about it, Corsair benefited from those conditions, and they saw exponential growth. But the real question is, what about now? Lockdown is being eased all over the world. People are going back to work, people are going back to schools. Now will be the real test of Corsair's business model and their growth. Are they still growing at the same pace as last year? And if it has slowed, to what extent has it slowed? And what kind of guidance will management be giving investors? So these are the key questions I have going into Corsair's earnings on Tuesday, and I'll be hoping for a good answer. And if I get a good answer that I like, and perhaps maybe the stock sells off to maybe mid-20s or low 20s, I could start a position in Corsair at those valuations. Now, next up is Nikola. I'm joking. Nikola is not on my radar at all. Speaking of Nikola, what do you guys think of Trevor Milton being indicted last week? I thought that was absolutely hilarious. And I put it on my Instagram that Steve Burns, you're next, mate. Steve Burns, you're next. So moving on, we have Skillz. Okay, Skillz will be reporting their earnings after market close on Tuesday. And Skillz is another gaming stock that I have been paying attention to recently. I have mentioned that I really like the growth within the gaming sector, and I do want some exposure to that industry, because right now I don't. But Skillz right now, in my opinion, is a little bit rich. Okay, they have a market cap of $5.64 billion, right, with a price to sales ratio of 20.89. So I would love to see this slash in half. If we can get the market cap to maybe 2.5 billion with a price to sales ratio of 10, then I think that could be quite interesting, and I would love to start a position at those levels. But right now, it still just remains on my watch list, and I'll be looking forward to earnings. Now, on Wednesday, you have some interesting companies reporting earnings. A retail favorite is BNGO, Bionagenomics. Fastly is another retail favorite. You got Win, Jeremy for financial education is a big bull. It's a big win bull. They're going to be reporting earnings after close. But Etsy, me and Etsy, right, we go way back, right? So if you've been watching my video for over a year, you would know that I was buying Etsy, right, back in June. Back in June last year, I was buying Etsy at $80, $90. And I remember the last time I purchased Etsy was around about $102. I think I bought Etsy at $103, and that was it. But I sold Etsy too soon. If you take a look at the stock price, I mean, it went up to $251 a share. But I started selling Etsy at about $200. So when I was up over 100% on my position, I started selling Etsy because I had pretty much doubled my money within the space of 6-7 months. And also I sold around January. So when GameStop was going on, when AMC was going on, when all of the meme stocks were going crazy and everybody wanted to invest, I had a giant clear out of my stock. Etsy is one of those stocks that I decided to sell because I was up over 100% in, because every man and his dog wanted to invest. And as you know, the saying goes, if the driver wants to invest in stocks, that's usually the time you need to be getting out of stocks. And when I saw everyone trying to get into stocks back in January because of GameStop was everywhere. It was on the news. That's when I started a fire sale and I sold the majority of my stocks. But Etsy as a business has continued to improve over time. So Etsy is a stock that I wouldn't mind owning again, but I would need it to go a lot lower. And it also depends on the results that they report during earnings, because we saw with Pinterest, they saw a decline in their monthly active users. So if Etsy follows the same path and they start to see a decline in MAUs as a result of people going back to work, lockdown opening back up, then, valuations could get quite interesting for Etsy. And I think Etsy has a great future ahead of it. So I will be watching Etsy. I mean, I'm not interested at any of these prices, but we'll see what happens, because Pins did suffer a big sell-off. I think it was about 20%. Yep, it was about an 18+% sell-off after a decline in their MAUs. And, let's see whether something similar will happen with Etsy. Now, on Thursday, you have some interesting companies before market open. You have Fiverr. Fiverr is another stock that I owned last year. I was buying during the crash. I got a great price. I sold for more than 100% profit with Fiverr. I don't plan to gain anytime soon. I think Fiverr was the pinnacle of a fantastic stay-at-home stock. Same with Upwork. I sold Upwork for close to 100% profit, secured my profits in Fiverr, and I have no interest in getting back. You also have Wayfair. Wayfair is another one that I expect to see a potential decline in MAUs. But moving on to market close, you have Square. Square is another stock that I sold too soon, guys. So going back to this video in June, again, I mean, June, I was buying. Last year was a fantastic year for me. I can't lie. It's the most money I've made in the stock market, period. All right. So I was buying Square in the 70s, 80s, and 90s. And I started selling Square at 170, 180, and I ended up selling out of Square completely back in January. So around the same time when I sold Etsy, Fiverr, Upwork, I sold Square as well because I was up over 100% profits in my position in Square. And again, I was just doing a massive clear out, and I increased my cash pile because I was anticipating a huge sell-off post the whole meme stock era. And that's exactly what we've seen recently. But I do love Square. Valuations for Square right now are still a little bit expensive. Okay, so they're currently have a market cap of $112 billion with a price to sales ratio of 8.5 and a forward PE of 117. So they are trading quite rich, okay? But the CEO, Jack Dorsey, has announced some interesting plans for Square in terms of Bitcoin and a potential hard wallets. And I can see how they can incorporate that. And that does make me excited about the company long term. So with Square, if we can see the market cap in the low $90 billion range, things could start to spice up for me. But at these valuations, it's just too rich for me. But I will be paying attention to their earnings. Now, last but not least, we have Beyond Meat. I'm a massive bull on the plant-based food industry. Tattoo Chef is one of my largest positions in my portfolio. So I am bullish on the industry. Beyond Meat has just continued to secure lucrative contracts and partnerships with some big names in the game. I mean, you name it, they're probably already in bed with them. And one of the recent ones was Pizza Hut. You know, they launched 3 plant-based pizzas, which are Beyond Meat pizzas, which is only going to drive future sales for Beyond Meat. And I think right now the valuations are starting to slightly become a little bit interesting. I still think Beyond Meat is still quite pricey. The price to sales ratio of 18.52 with a market cap of 7.74 billion. It's tricky because you have the likes of Tattoo Chef who are also making ground, and their market cap is sub $2 billion. However, you have Beyond Meat, which is trading at 7.74 billion. They're within the same industry, but they have different business models. But the question is, do I start a position in Beyond Meat at these valuations, or do I just buy more Tattoo Chef at sub $2 billion? And the answer has been just buy more Tattoo Chef. And that's what I have been doing. But in the name of diversification and also investing in the 2 biggest names within the plant-based food right now, which is Tattoo Chef and Beyond Meat, is very hard to ignore. So I will be looking forward to Beyond Meat's earnings. If we can see Beyond Meat potentially flirt with $113 a share, which it has done in the past, things could get interesting. It might be enough to tempt me to make a starter position at these prices. But if this support level doesn't hold and it pulls back even lower, maybe to $100 a share, then I could start to build properly in Beyond Meat. But until then, I will be looking forward to their earnings, looking forward to guidance, because again, it will be a great indicator for the plant-based food industry as a whole. So that pretty much wraps up my plan going into earnings next week. What earnings are you looking forward to this week? Comment in the section below. But thank you so much for watching. I appreciate your time, and I'll catch you in the next one. Peace.